I'm going to kick off with a discussion of building your home buying team. So we will be talking about the various players who are involved in this process. Um, could we go to the next slide, please? Right. Okay. Sorry. So your mortgage team is made up of colleagues of mine from right here at the credit union, and then another group of key partner vendors from outside the credit union. All of these folks have very important roles to play in your home buying process. We'll talk about the role of each of these. Um, and we'll end this session with a brief high-level overview of the home buying process overall, really from start to finish, the various steps that will take place so that you would know what to expect. Oh, one thing, as Ray said, we really would like to have your questions. So again, use that Q&A function, not the chat function. It's the Q&A function here on your Zoom control panel. Listen, we've got a lot of attendees today, and my experience tells me that we'll probably have a lot of questions, and we will do our best to answer them. It's very unlikely that we'll be able to answer every single one of them live right now, unless you have several more hours. So fear not, we will have a team inside the credit union who will review and organize all of those questions, and we will get answers out to everyone as quickly as possible. So again, thanks for your effort in putting in questions for us. Okay, your UNFCU mortgage team. We're going to start off with the team players from here at UNFCU. The first person that you're going to speak with when you begin your home buying process will be your mortgage representative. And a quick side note, some lenders use the term mortgage representative for this role, and some lenders use the term loan officer. They're one and the same. It makes no difference. Some lenders use both, like UNFCU. Just for continuity and for ease within this presentation, I'm going to use the term mortgage representative, but loan officer could easily be switched in. So your mortgage representative is going to be your point person throughout this entire process, from the very beginning when you have that initial meeting with your mortgage rep, all the way to the end of the process for your closing. The first thing that you'll do is schedule an appointment with a mortgage representative. We would love for you to do that at your earliest convenience. Your mortgage representative is going to ask you some questions about what is it that you want to do. Do you want to buy an apartment in New York City, or do you want to buy an investment property in Michigan, or a condo on the beach in Florida? So we'll need to find out what it is that you'd like to do. Your mortgage rep in that very first conversation is also going to do a pre-qualification. A pre-qualification is a very early step based on your income, your assets, what your goals are. Your mortgage representative will be able to give you a very detailed estimate of what amount of money you should be able to qualify for. So that's really important. Listen, all of us would maybe like to buy a $5 million apartment on Park Avenue, but that isn't the cards, or it is not in the cards for most of us. So it's important to have a good idea of what amount that you are going to qualify for. You'll see here on the slide, we also talk about a pre-approval, which is a really very important step. I know Lisa, our real estate agent who could be coming up next, would agree with that. We're going to talk about a pre-approval specifically a little bit later in the process. Your mortgage representative will help you review all of the funds that you're going to need for this real estate transaction, and also go through all of the various different types of loan programs. And we're going to talk about this in a bit and figure out which mortgage program or which option would work best for you in your specific scenario. While we're talking about that pre-qualification, very early on, I want to let you know a couple of supporting documents that would be really helpful for you and your mortgage representative when you have that initial meeting. We would love to be able to document your income. So for UN staff members, that would be a pay statement and your personnel action form. Or for non-UN staff or non-UN members, that would be a pay statement and your most recent W-2. We'd like to know about your assets, so a recent bank statement would be very helpful. We would need your US Social Security number if you have one. As Ray mentioned, UNFCU is quite unique in that we offer mortgage loans to many, many members who either do not have a Social Security number or have a very limited US credit profile. We are very adept at working with members who don't have US credit. And there's maybe a few extra steps for you, but it's certainly something that we would walk you through to come to a successful conclusion. We'd want a photo ID. All your name has to match throughout on all the various documents and applications and forms. Again, some conversation about what it is that you might like to purchase. And ultimately, we would need the contract of sale. We're going to be talking about the contract of sale quite a bit, so we'll hold off on that for right now. The next team member that you will work with is your mortgage processor. And the mortgage processor and the mortgage representative really work as a team. The mortgage processor is the person who's going to organize all of these documents that we're gathering from you. And it can seem like a lot of paperwork, but there's a lot of information that needs to be reviewed. So your mortgage processor will gather all of those materials, organize them, order other secondary types of items that we need, appraisal reports, credit reports, title reports. We're going to touch on all of those a bit later in this presentation. Ultimately, the mortgage processor will issue to you your commitment letter, and that's a great day. That's the approval for your loan. And also help you be prepared for the closing. So your mortgage processor and your mortgage representative work very closely, hand in hand, with you from the beginning of the process until it ends. This next person is a source of mystery for a lot of borrowers, whether at the credit union or any other lender, and that's a mortgage underwriter. So the mortgage underwriter has a very, very important role, and a lot of authority is granted to them by us as a lender or any lender. So the mortgage underwriter is a professional who's going to review all of this information that has been provided. Your application, your supporting materials, they're going to review that compared to our underwriting or approval guidelines. And ultimately, it is the underwriter who approves or declines the loan. Of course, we hope that's going to be an approval, but there are situations when a member simply doesn't qualify for the loan for a variety of reasons. And the mortgage underwriter is the person who ends up making that decision on behalf of the credit union. Now, interestingly, you would 99.9% of the time not have any direct contact with the underwriter. Your mortgage representative and your mortgage processor would be the, I guess, sort of intermediary between you and the underwriter. So although you're not speaking with them or interacting with them, the underwriter plays a very, very important role in this process. The fourth and final credit union team member that you would work with is your closing representative. So once you've started your application, submitted all of your documents, the file has been underwritten and approved, we'll prepare you for the closing. So the closing is the final step in the purchase process. We'll talk about some of the details and who's involved in the closing. But your closing representative is going to be the person who coordinates all of the movement of the monies that will take place, produce the required mortgage and legal documents, interact with the settlement agents and attorneys. A lot of what they do are the very final specific items. They will calculate down to the penny, literally how much money needs to come for or be sent to each party in this process. So this is a great part. Once you're working with your closing representative, it means that your loan's approved and you're about to actually finally buy the house. So those are your UNFCU or lender team players. There are a bunch of other key players. The first one, and really one of the three most important would be your real estate agent. So your mortgage representative, your real estate agent, and then the next, which is going to be your real estate attorney. So let's talk about real estate agents. Um, I can't stress enough how important it is, in my mind, for you as a buyer, especially if you are a first-time home buyer, to have a experienced, knowledgeable, professional real estate agent working with you. I think everyone now who's shopping for a home begins the process online, and why not? It's fascinating. It can be a lot of fun, whether you're using Zillow.com or Redfin or any of the number of websites that are available. It's a lot of fun to see what's out there in the marketplace and what might be available. But when you are getting ready to actually make an offer and you're scheduling walkthroughs of properties, um, it's a rather complex process, and you really need the assistance, and not just assistance, but the hard work of a professional real estate to help you maneuver through that process. Your mortgage representative will be working with you on the loan aspects of it, but your real estate agent will be working with you on the finding of the house. And your agent will, have a wealth of knowledge that you just can't get from a website about schools or shopping or nightlife or whatever it is that may be most important to you. And your real estate agent will do a really full in-depth market analysis of a property or a neighborhood or community that you simply are not able to do yourself. So we highly recommend that you select and stick with and work with a real estate agent. The next part of this sort of triumvirate of three important players on your team is the real estate attorney. I'm going to take a step back for just a moment and say that most lending laws for real estate or real estate lending laws in the United States are state based. There are some overarching federal regulations and guidelines that, of course, we all have to work within and adhere to. But a lot of real estate lending is based on state law. So, in some states, particularly in the northeastern United States, New York, New Jersey, Connecticut, Massachusetts, it's necessary that you have, as a buyer, a real estate attorney. In fact, the seller would have a real estate attorney, and the credit union, as your lender, would have a real estate attorney or bank attorney. In other parts of the country, this is not the practice. So if you're buying in California or Florida or Texas, typically in those states there would be a private company that's called a settlement agent, and that company would sort of take on the legal roles that a real estate attorney would do. But since we're based in New York, and that's you in headquarters, let's assume that you're buying in New York, which means that you would need to have a real estate attorney. So what's the attorney going to do for you? They're going to represent you throughout this process. Initially, the real estate attorney will review the contract of sale with you, which is the contract of sale is the legally binding document, the purchase agreement that says that the seller is going to sell you the property and you're going to buy the property under these agreed upon terms. And contracts can be negotiated, and they are negotiated. So your attorney would be working with you at the beginning of the process. During the processing period of the loan, that sort of in between period, your attorney is going to be reviewing really all the legal history of the property. And we're going to talk about some of that, what that role is. Basically, we want to make sure that the home is free of liens or judgments, that the seller has the legal right to sell you the property. And finally, the real estate attorney is going to physically attend the closing, again, that meeting where all the parties meet up and documents are signed and money changes hands. Your attorney will physically attend the closing with you to review all of those legal documents before you sign them. So, mortgage representative, real estate agent, and real estate attorney. You will be working closely with all three of them. Because they're so important, UNFCU is always happy to help provide referrals if you need it. You can certainly choose any real estate agent or attorney that you'd like. But if you would like our assistance in finding one of those team players, we'll be happy to assist. Okay, so let's move on to some of these other key players who aren't part of the credit union. Probably most importantly is the appraiser. So when you are buying a home and you are taking out a mortgage loan to finance that purchase, the way a mortgage loan works is that means we lend you the money and you pledge your home, the house, as collateral for the loan. What that means is if you were to ever go into default on the loan and not make your payments, we could foreclose on the property or repossess it. Now, no one ever wants a foreclosure to take place, and UNFCU has one of the lowest foreclosure rates in the United States. But that's just how mortgages work. That's how they function. Um, so, since you're pledging the house or the home as collateral for the loan, we need to make sure that the house is worth what you're paying for it and what we're lending you. So, we would hire an appraiser. And this is a real estate professional who would visit the home. They're licensed, by the state. The appraiser would visit the property, take pictures, measure, walk through the property, both the interior and the exterior, look at all the various amenities of the home. Um, and very importantly, the appraiser would compare the home that you're buying, the subject property, to other recently sold homes in the area. Because what they're looking to do is support the value of your home that you're buying compared to other recently sold properties. And ultimately, this very detailed multi-page appraisal report will be generated, and it indicates what's called the fair market value for your home. And as a lender, we rely on that appraisal report as an indication of what the true home value is. Um, so it's a very important part. Everybody's always a little bit on pins and needles as they wait for the appraisal to be done. Typically, appraisal values come in very close to the purchase price, and that's not through any acts of collusion or anything. It just means that the market is working. Um, you know, when your real estate agent has done a market analysis for you and said that based on all of this data, the home that you're looking to buy may be worth, let's say, $500,000. Well, that's probably pretty close to the market value. And that's what the appraiser is looking to determine also. If the home does appraise for slightly less, some negotiations could take place. If it were to appraise for more, hey, that's great. Good for you. That means that you're getting a good deal. Our next player is the title company. So, or a title insurance company. If you remember, I mentioned that the attorney is going to review all of the legal history of your home. And they'll be doing that through a title insurance company. So that we'll be reviewing to see what the chain of ownership has been. Has it always been, has that ownership passed legally from one owner to the next? Are there any types of liens or judgments against the property? Once all of that has been reviewed, and assuming that it's all clear, that everything's like in good shape, the title company or title insurance company would issue what's called title insurance. And of course, hey, nobody wants to pay for insurance, but this is a requirement for all mortgage lenders that you have this title insurance. Basically, it insures both you and the lender, us, hopefully in that case, against any types of future legal claims against the property. The title insurance company is also going to be the entity that manages the movement, all of that money at the time of closing or settlement. So they will be the ones to collect and excuse me, distribute all the funds that are changing hands as part of the closing. You would also have an insurance agent or a homeowner's insurance agent. So, as I mentioned, you're pledging your home as collateral for the mortgage loan. So, as a lender, we want to be sure that if anything were to happen to your home, that it could be repaired or rebuilt. Basically, let's say there was a fire and your house burned to the ground. Well, that home was collateral for the loan, so it would need to be rebuilt. Otherwise, there's nothing securing our loan. And for you as a homeowner, of course, you want to have the homeowner's insurance because you need a place to live. So if your home is damaged or destroyed, um, this insurance, homeowners insurance, is very, very important. Your insurance agent would be able to tell you about all different types of coverages that you may or may not need or want, in addition to simply like protection of the home, like for your own personal items, for some personal liability coverages, and so forth. So, an insurance agent plays a very important role. Speaking of insurance, I mean, if you've watched TV or read the newspaper, you would know certainly that over the past few years in the United States and really around the world, but here in the United States, there have been a lot of hurricanes, the wildfires in California, flooding throughout the southeastern United States, and really these types of natural disasters can occur everywhere. And all homeowners insurance does not necessarily cover all of those natural disasters. For example, let's say you live in an area, you're buying a home in New Jersey, and that area of New Jersey is prone to flooding. You may be required to purchase additional flood insurance. Or if you were in Florida, you may need wind or hurricane insurance, or wildfire insurance in other parts of the country. Um, that is something, of course, that your insurance agent would review with you. Some of those additional coverages, especially for flood insurance, may be a requirement and it can be quite expensive. So that's another reason that a real estate agent is very, very impactful for you, because that agent will know if you're looking in an area that's, say, in a flood zone. There's specific federal maps that determine who's in a flood zone or not. So again, all of these different players, you can see there's a lot of different people or parties that are part of this process, but they all end up working together. And if that's a well-oiled machine, then it allows you to go through this process as smoothly and as seamlessly as possible. One thing I want to mention, and maybe I skipped it. One other party that you would have involved in this process um, is a home inspection. So a home inspection is not required by us as a lender, but it's very important for you as a buyer, particularly if you are buying an existing home, meaning a house that has been lived in by someone, not a new construction property. So if you're buying an existing property, it's important that you hire an inspector to go in and view that home. I mean, you've gone in and you've walked around and you've looked around and you've fallen in love with this house, but you don't necessarily know all about the, the structure of this property. So you hire the home inspector to come in and check out all of the mechanicals, the roof, the electrical, the plumbing, the foundation, anything that may need repairs. Or that may be hazardous. This is important because remember I said that your contract of sale, is a negotiable document. So when you signed a contract, either just before signing the contract or just after, and you have a home inspection, listen, ideally, everything comes out perfect and the house gets an A+ rating and there's no worries. Frequently, there could be some minor issues. Let's say the furnace may need repair. Well, at that point, your inspector would report that information to you, and you may go back to the seller and negotiate some on these repairs that need to be done. Maybe they give you a credit for some of it, or maybe they go ahead and make the repairs prior to the closing transaction. It could be much worse though, or better, I guess, depending on how you look at it. Let's say the inspector comes back and says, wow, beautiful home, but there is a major foundation issue and it's going to cost $60,000 to repair this house. Unfortunately, and it's certainly disappointing at that point because you've found this house now that you love, but if there's major problems, you may decide that you don't want to buy this home at all and that you're going to walk away from the deal. And your contract would give you the opportunity to do that. So a home inspection, again, while not required for our purposes, in underwriting or approving your loan, it's very important for you as a buyer. Okay, so those are all the different team players that are going to be involved in this process. Um, as I mentioned, let's talk just for a moment, sort of on a high level place, about the actual steps of buying your property. Okay, so I've mentioned that the top three in your mortgage team. You're working with your mortgage representative. You have a real estate agent lined up, and you're working with that person, and you've got your real estate attorney in place. So we're not sure how long this will have taken you. Maybe you'll be really lucky and you find a home that you want to purchase on the very first weekend that you go out looking at homes. Hey, that's great. It does happen. Or maybe it's going to take you 6 months. Who knows? But ultimately, once you have found the property that you'd like to purchase and you've made an offer, which is typically verbal, depending on the state, and you've agreed to a price with the seller, the next step is that the seller's attorney is going to draft the contract of sale. Again, that's that legal document that you're buying and they're selling under all of these agreed upon terms. And sales contracts um, generally are set by the state. So they vary from one state to the next, but they all work in a very similar function. If you're buying an apartment, a co-op, or a condominium, and we're going to talk about those types of properties in our third segment of the seminar today, your attorney is going to have some things to do, reviewing some financials and so forth for that property, for that larger condominium or co-op. Your attorney, as I mentioned, is going to review the contract of sale basically on your behalf to make sure that everything in there is in your favor, or at least is not detrimental to you in any way. Once that has all been agreed upon, you as a buyer are going to be asked to make a contract deposit, which is also called an earnest money deposit. Um, Basically, it's your good faith deposit showing that you are committed to buying this property. How much that contract deposit is, again, depends on the state. In some states, it may just be $5,000 or $10,000, and I don't mean just, but I mean it's an amount that's agreed upon. If you're buying a $500,000 home, a $5,000 deposit isn't a huge amount. If you're buying New York, especially if you're in New York City, you'll be expected to make a contract deposit of 10% of the purchase price. So on that $500,000 home, you would be making a $50,000 deposit upfront. That money would be held by the seller's attorney until the time of closing. And at that point, the funds would be credited towards your purchase. If for some reason you are declined for your mortgage and you cannot get the financing that you need, and you've made a good faith effort to do so, that contract deposit, the earnest money deposit, would be refunded to you. Okay, so we're wrapping it up. You've made your deposit. You're going through the mortgage process. You've already been pre-approved for your mortgage, so this part's easy, and we're going to talk about that in a bit. Your attorney is going to be doing all of that background legal work with the title insurance company. If you're buying, again, a co-op or a condominium, there'll be some additional application materials that you'll have to work on specifically for that building. And your real estate agent would be the best professional to help you with that portion of this process. You'd end up together with your mortgage representative and your mortgage processor, you would end up clearing up any last remaining items needed for your final loan approval. We may need updated pay statements or bank statements or explanations on smaller items. And finally, your file will go to the closing department and your closing is going to be scheduled. Again, that's when you take possession of the property. How long does all of this take? Again, it's going to depend on where you're buying. If you're buying in the Washington, D.C. area, Florida, anywhere out west in the Western United States, the expectation is that your closing would take place typically in roughly 30 days or maybe even less. In the greater New York area, things generally, surprise, surprise, take a little bit longer, and you'd probably be looking at 45 to 60 days for this section of your home buying process to take place. If you were buying a co-op apartment, it could be even longer. There's some added layers of approval that are required by the co-op, which can add some time. And you may be looking at 60 to 90 days to purchase a co-op. So, for those of you who, probably a majority are thinking of the greater New York area, you're looking at 45 to 60 days, shorter in other parts of the country. Okay. I believe that we are moving on to some Q&A. Hopefully we've gotten some questions in while I've been talking away, and we'll see if we can answer them for you.
Thank you, Chip. That was very informative for everybody. And we're running a little bit over, but I think that all that information that we provided is valuable for our members here. We do have a sundry of questions, and I want to kick it off with a question about multi-unit building. And if a member uses us for a loan on a building up to 3 to 4 units, and I will use one of the units as my primary residence. So the question is, can they do that type of loan with us?
Absolutely. That's a great question. So UNFCU offers mortgage loans for single family residences, which is just a house, but also for multifamily properties. So that's a home that has 2, 3, or 4 units. If you're buying a multifamily property and you're going to live in it, then it's a primary residence for you, but you've got the added benefit of receiving rental income from those other 2 units. There are some slightly higher down payment requirements if you're looking at 3 or 4 family units. I believe it's typically 20% of the purchase price. And just as a note, the maximum number of units that we will finance in a single property is 4. So if a property has more than 4 units, just as an industry standard, it's considered a commercial property. And that's not the type of mortgage lending that we do. So to buy like an 8-unit apartment building, you'd need to go to a commercial lender for that. But for this member, 3 or 4 units and you're going to live there, absolutely. We would be happy to do that type of lending.
Great information, Chip. Thank you. And we've got another question here. Does a good credit score in the US, say at least 700, influence UNFCU loan rate and reducing the loan rate?
That's another excellent question. Listen, we could have an entire hour-long seminar on credit, and you know what? Your mortgage representative will be happy to go into like great detail about credit. But the short answer to that question is yes. So for someone who has a credit profile in the United States, the higher that person's credit score, the better the terms of the loan are going to be. A credit score and a credit report is to show your ability to repay debt over time, and that's important for us because we're going to be lending a lot of money. So, for someone with a 740 or higher credit score, you're typically going to be eligible for our very best rates. Now, listen, we're open to lending to people who don't have perfect credit scores. So if the score is, say, in the upper 600s or so, that's still fine. We can do it. It would impact the rate, especially on certain types of loans. So there could be some strategy that would come into play, working with your mortgage representative to figure out which loan program would work best for you. But very quickly, for our members who don't have credit in the United States, it's fine. We would develop an alternative credit portfolio basically for you. So we would get, say, a landlord letter or proof that you'd paid rent on time. Perhaps you have a credit card issued outside of the United States, or even 12 months of cell phone bills. We would establish some payment history using these alternative sources. And even though you don't have a credit score, we would be able to make a mortgage loan to you. Again, your mortgage representative would help you strategize about which program is going to be best suited for you in that scenario, but it's certainly a possibility.
So Chip, to expand on that answer that you just gave, Are there any first-time homebuyer grants or down payment assistance programs for non-US citizens G4 visa might be eligible for?
We have some very limited grant funds available, um, and I believe that a G4 visa holder is eligible for them.
I would agree. I believe that the G4 visa would be the minimum standard for a grant program. Um, However, I think that is something that we would need to review for
Yeah.
this
And
in
we have
order
a
to
lot more
answer it more
flexibility
fully.
for G4 visa holders, specifically UN staff members, than some other types of visas that members may have, H1B or J1 or L1 or whatever it may be. So we have more openness and flexibility. So yes, there are grants available. I'm going to be touching on some first-time home buyer programs that we have in the final segment of the presentation today.
Right. We do have first-time home buyer programs here at UNFCU through our portfolio lending, and Chip will talk a little bit more about that later. I think we have time for one more question. Can UNFCU assist in finding a real estate lawyer for selling a property as well as buying one?
Absolutely. So, real estate attorneys are happy to represent a buyer or a seller. Um, we're happy to use, any of the many attorneys that we've worked with closely over the years and refer them on to you. Obviously, you're under no obligation to use an attorney recommended by us. But we are happy to help you find one if it's of assistance to you.
Yeah, and a follow-up question to that is that do we need to find all the team members? And the answer is no. We will make recommendations for you in this process. If you do know people in the industry that you prefer to use, you can use them as well. The appraiser, however, is something that is chosen independently from even UNFCU. We have a appraisal management company that chooses the appraiser on a rotational basis. It's called a arm's length transaction for us so that we're not influencing an appraiser for valuation purposes. So that is an independent selection by a appraisal management company. And Chip, I think that that is about all the time we have for this, but I do want to tell everybody that all the questions that have been posed to us will be answered by one of us, within the next week. So if you don't hear the answer to your question, be assured that we will answer all questions.